Hi, so I'm often getting asked, how do I find good ideas for stock investments? And if you want to be like the Warren Buffetts and the Peter Lynches and pick specific stocks, well, you have to know how to narrow your search and find these companies. And what I'm going to do today is show you one of the tools that I use called the FINVIZ Stock Screener. And it's very helpful for narrowing our search down to just a handful of companies. So watch along and you can copy this exact same process for yourself. Now, before I jump into the tutorial, there's going to be a lot of financial terms that I'm going to be talking about today. So things like the price to earnings ratio, price to book, current ratio, debt to equity, free cash flow, operating margin. If you're not familiar with these terms, well, I suggest taking a step back and reading up on value investing. And honestly, a great place to start before you read any books or anything like that is just do some Googling of Warren Buffett, Peter Lynch investment strategies, and just read some blog posts that are out there and just see whether you think that this stock selection strategy is for you. But if you are interested in my favorite books, the ones that I learned from, well, let me know in the comments. And also, if you enjoy this video, please make sure to like it and subscribe to my channel so you don't miss any future videos. There are thousands and thousands of companies out there, and the purpose of this stock screener is to filter out all the companies that we're definitely not going to be interested in. So if you want to make it as a stock investor and you want to be able to choose the companies for yourself, well, being comfortable with a stock screener is going to be very important just to narrow your focus. And I think that the FINVIZ free stock screening tool, well, I think it's the best free tool out there. So here is the FINVIZ screener, and I'll make sure to leave a link in the description below. So the first thing I'm going to show you is that you can actually put in any specific ticker that you like. So if you want to get the information for a particular company, let's say NVIDIA, I'll put in their ticker, I press search, and I can see, well, all the information for NVIDIA. Now, as an example here, I can look at, well, I'm in the overview tab at the moment. If I move over to the valuation tab, it gives me valuation metrics. In the financial tab, it's financial metrics, ownership, performance, technical, all these other different, all this other information really about the company. Ownership is just like ownership percentages, things like that. So that's how you sort of find a lot of just the raw data on a particular company. Now I'm going to show you a little trick that I like to do when I'm looking at a specific industry. So what I can do is I go into the descriptive tab here when I've got all the different companies. I've got no filters on at the moment, and I'm in the descriptive tab. There's a section here called industry. Now I can look at all the different industries that are out there. Let's look at, I don't know, auto manufacturers. So in the auto manufacturers screen that I've just run, I've got all the different auto manufacturers from USA, United Kingdom, Canada, Japan, Italy. Yeah, so we've got, look, Ford Motor Company, Honda, Ferrari, Toyota, Tesla. As you can see, it's just filtered out all the other companies except for the car manufacturers. Now what I can do is I want to see out of these car manufacturers, which one is the best value right now. So I'll go to the valuation tab here, and I might want to sort this by PE ratio. Okay, so it's giving me the lowest PE ratio down to the highest. Now, some of these have no PE ratio. It's because their earnings are negative, and you don't have a PE ratio when the earnings are negative, which is a bad thing. So for the companies that do have positive earnings, well, here are the PE ratios. Now you've got Tesla down here at 1,000, which is probably one of the highest PE ratios that I've ever seen. And you got all the way up to 1.45 for AYRO. Never heard of that company before. But Toyota Motor, that's a company we were all familiar with, and that's a PE of 13 right now. So that's a pretty attractive PE ratio. So now I might want to look at, I don't know, price to book ratio. So I've just clicked on the price to book ratio column here, and it sorted the companies by that metric. So I can see Honda, Ford, Toyota, GM, all with high, like pretty strong price to book ratios in terms of a valuation point of view. So they're probably looking at the best deals right now in terms of comparing it to the other auto manufacturers. But that definitely doesn't mean I want to invest in any of these companies, because there's so many other metrics that I want to look at. For example, let's go to the fundamentals now. Now, I, for example, don't like debt. So let me filter the companies now with the debt to equity ratio. It has to be under 1. So anything above a 1 is being filtered out. And it's narrowed my list down to just 5 companies. Now, I'm not familiar with really any of these companies. Nikola comes up a lot in the news a lot, but I'm not comfortable with that company really. So we've got, well, these are the companies that have a low debt to equity ratio, but none of them were strong in the price to book, the PE ratios, except for this guy here, this AYRO. That keeps coming up, so maybe there's something there. But let's go into the descriptive tab again. Now I want to have the IPO in the last 10 years, sorry, more than 10 years ago. So that means the company has been around for quite some time and therefore it's got some sort of track record. And here we are again with AYRO. So look, maybe that's a company that I'd want to have a look at. I don't know much about that company, so I could go in and dig a bit deeper. And as you can see, the screening tool has filtered it out and helped me work that out. So now I'm going to show you what I call the deep value screen. Now, we're not really worried about profitability. We're just looking for seriously undervalued companies. So I've got an IPO date here of more than 5 years old. We don't want startup companies or anything like that. It's got to have some sort of track record. So it's been filtered for that. Then in the fundamentals, I've got a PE ratio under 5, which is very low. A price to book under 1. A price to free cash flow under 15. Now, I like the price to free cash flow ratio because we're buying, what we want to do is a multiple of what we have to buy the free cash flow for. So that's a metric that a lot of people don't really look at, but I like to look at it. So free cash flow essentially is what the business can return to us as shareholders through reducing debt or share buybacks or something like that. So if we can buy that free cash flow for a good deal, well, I think that's a good investment. And I've also got the debt to equity. I want that to be under a 1. So out of all the different companies in all the different sectors, so we're not in any particular industry right now, I've got a list here of 10 different companies. Now, this is very interesting because I can see some companies here that I've already done a fair bit of research on in the past. So obviously the screening tool has picked up that they're undervalued, and through other parts of my research in other methods, well, I found them already in other ways. So for example, Unum Group, it's an insurance company. When I did my insurance company series, I found Unum Group as severely undervalued as well. Here it is here. TK Tankers, DHT Holdings. Now I actually have significant investments in both these oil tanker companies. If you're interested to know why I invested in these two companies in particular, I have oil tanker videos. You should definitely go back and watch those. But as you can see, I've got a list of 10 companies here that are seriously undervalued for whatever reason, and that's a great place to start going and doing some research. Now, another thing I can do is I can actually click on one of these companies. Let's do MMA Capital Holdings. No idea what this company is, but maybe it's a company that's obviously undervalued. So let's find out what's going on in a little bit more detail. So I've clicked on the company. I've got all the statistics here for the company, the financial statistics. But here, I've got all links to articles about the company. And on the right-hand side of each of these articles, it shows whether the share price has moved in that day that the article came out. So we've got a 5.5% move up, an 8% move up, an 8% move down. And what I could do is, let's say this 8% move up, I could read this article about what happened for the share price to go up 8%. And it looks like it's got announces annual meeting for update. And it's obviously the first quarter of 2020 results came out. So they obviously announced their results. It's probably better than expected. So the share price has jumped. So I could go and read and find out exactly why, but I can see here that there's articles about that topic to do further research. And at the same time, I can see why the share price has gone down by just clicking on these articles where the share price has gone down that day. I think that's a really interesting little tool to get a bit more insight into the big ups and downs of the company. Okay, now let me show you my favorite stock screen that I'm using at the moment. So in the descriptive tab, I've got an IPO date of more than 10 years because I want older companies. Now, if we move over into the fundamentals, I've got a lot of criteria here, so I'll go through them quickly. I want a PE ratio under 15, a price to book under 2, a price to free cash flow under 15. Now, I want earnings per share growth over the past 5 years to be positive because I want to see some growth. I want the growth over the next 5 years, like the estimates, I want that to also be positive. I want the sales growth of the last 5 years to be positive. I want return on equity to be above 10%. I want the current ratio to be over 1. I want the debt to equity to be under 1. And I want the gross margin, operating margin, and net profit margin all to be above 10%. I just like companies that have decent margins. 10% is actually not very high, so I just want to make sure it's above this 10% number. And as you can see, it's pulled a list of 6 different companies here from different countries as well. We've got the USA, Hong Kong, Brazil, USA. So I've already invested in DHT, as I've told you earlier, but there are some other, and Global Cord Blood Corporation. Now that's a company that I've also invested in a few months ago. I've done a full video on that, so if you want to watch that, I'll explain in more detail. It's cool that it's come up here on this screen. But there's 4 other companies here that I'm not familiar with at all. And they would be really interesting for me to go and research because it meets most of the criteria that I'm really interested in. So Big Lots looks like it's discount stores in America. So that looks like it's severely undervalued and it's making some decent money. All of these companies are interesting. Now, I can rule these out for whatever reason. It's just a list, remember, and I can cut them for example, this Brazilian company, this utilities in Brazil. I'm not familiar with Brazil at all, so I might just rule that one out straight away. But if you were familiar with Brazil and wanted to do the research on this company, well, that would give you an edge. Now, I also like to play around with these numbers a little bit as well. So for example, the PE ratio being under 15, well, maybe that's a little bit strict. I can move that to under 20, and it didn't change. I got the same, still got the same 6 companies, but I can play around with each one of these sort of metrics and make them a little bit more lenient or a little bit more strict, depending on how big my list is. So if I want to find more companies, well, I'll just be a little bit more lenient, get some more companies, then go and do some more research. Because obviously from recent events, some of these companies might not have earnings per share growth over the past 5 years consistently. So maybe it doesn't need to be positive, and I can change that to, well, any number. And it's given me another company, and it's given me TK Tankers, which is really interesting because I've invested in TK Tankers before. Now, definitely don't invest in these companies just based on doing this screen, because this is just way too much science and not enough art. A stock screener is really just an amazing tool that we use to narrow our focus and save months and months of research. Because prior to the internet, well, people had to get big books and go through these companies one by one and ruling them out. Now, sometimes it would take all year to go through all the different companies, and then the new financial information would come out and you have to start again. That must be so boring to do. So we should be very thankful that we have stock screeners now. But please, one of the big takeaways from today's video is the perfect stock screen just doesn't exist. You do have to play around with these a little bit, and then you have to still go and do the research. And like I said earlier, here are the list of all the criteria that I use for my screen that I'm using at the moment. But again, I tinker around with these numbers. I really hope you enjoyed this tutorial. Give the video a like if you did, and I will see you in the next video.